Friday, June 12th, the biggest IPO in history of the stock market happened. SpaceX went public. $1.77 trillion. Bigger than anything that's ever come to the market. And it got a little personal for me because CNBC actually featured me in their coverage of it.
Mikey Moran is a 49-year-old retail investor and entrepreneur. He says he will probably buy shares if he gets an allocation, but he's not treating it like a sure thing. He doesn't plan to invest more than $10,000.
I'm willing to take a little bit of a risk, but not that much of a risk. Will I buy the allotment that my broker, like a Robinhood or E-Trade, allows? I probably will because it's historical, but I'm still on the fence of whether it's a good trade. There's much safer bets as far as established companies that I even do business with, and looking at the valuation and the uncertainty of what could happen, it's a little concerning.
I put in for 20 shares. I got 11. And before anybody in the comments calls me a hypocrite, yeah, I felt the FOMO. I called it the Super Bowl of IPOs in my interview with CNBC, and I meant it. But here's what I want to do in this video that nobody else chasing this hype is doing. Actually look at the numbers, because once you understand the math behind a $1.77 trillion IPO, you'll understand exactly why I grabbed 11 shares for fun and why my real money stayed out. Quick one, I'm not a financial advisor. I'm a guy showing you my actual thinking in my actual trades. Do your own homework. Let me be straight with you and why I even bought in, because it matters. I'm a content creator, and it's really hard to sit here and report on the biggest IPO in history from the sidelines. You need a little skin in the game. So part of why I went in for an allocation was honestly just to see what I could get and to be able to tell you what the process actually looked like from the inside. And look, I'm not gonna pretend I'm some monk who's above the hype. I chase a wave sometimes. Last summer, I bought 10,000 shares of Opendoor and it ran almost 80% in 2 days. I get it, the pool is real. But here's the difference, and it's the whole point of this channel. 11 shares of $135 stock is what, $1,500 against my entire portfolio. That's more of a rounding error. It was never gonna change my life either way. I thought it was gonna be fun. It's a story. It's not an investment thesis. And that distinction, feeling the FOMO, but sizing it like a rounding error, is the actual skill. SpaceX priced at $135 a share, that pinned the company at $1.77 trillion and raised $75 billion, making it by a mile the largest IPO ever. The old record was held by a Saudi company at $29 billion. This more than doubled it. Then it opened at 150, ripped more than 25%, and tagged a high of 176.52. The demand was absolutely nuts. Retail investors put in over $100 billion in orders. Total demand was north of $250 billion. People wanted it. So far, that sounds amazing, right? But here's where you have to slow down and actually think. Everybody buying today is dreaming the same dream. This is the next Tesla. So let's test the math, because the math is brutal. When Tesla went public back in 2010, it came out at a tiny valuation, under $2 billion. That's why it could do what it did. Since just about 2018, Tesla's up around 1,700%. It grew into a $1.5 trillion company from almost nothing. And that's the dream. But SpaceX didn't come out small. SpaceX came out at $1.77 trillion. It's already bigger than Tesla is right now. It debuted as one of the largest companies on the entire planet. So do the math on the dream. To do what Tesla did, 100x, it'd have to be worth more than every company on Earth combined. Probably several times over. It's not happening. You cannot repeat early Tesla math starting from the 7th biggest company in the world. And the price already knows the story is huge. SpaceX is trading at roughly 94 times its revenue. The only part of the business actually making money is Starlink. The rocket side and the AI side are burning cash. and the company's sitting on a $40 billion accumulated debt. At that price, you're not betting they succeed, you're betting they already succeeded. The valuation basically assumes they've already made it to Mars. It's like buying a championship team the day after they win the title at championship prices. You're paying full freight for the trophy that's already in the case. Where's the upside? Now, let me be just as honest about the other side, because I am not a SpaceX hater at all. I told CNBC it's hard to bet against Elon Musk in whatever he does, and that it's really hard to argue he's not one of the greatest entrepreneurs of all time. And I meant every word of it. This man builds things nobody thinks are possible. Reusable rockets, Starlink beaming internet down from the space to 10 million people. He's done the unthinkable over and over. So this is not a question of whether SpaceX is an incredible company. It obviously is. It's a question of price. Great company and great investment are two totally different things, and the difference between them is what you pay. Today, you're paying the highest price it has ever traded on its very first day. Incredible company, brutal entry. Now, here's where some of you are loading up the comment section. Mikey, you sold Tesla way too early and it cost you a fortune, and now you're passing on Elon's next company. Did you learn nothing? It's a fair shot, and yeah, getting out of Tesla early is one of my biggest trading mistakes I've ever made. I held it for a couple weeks back in 2018. Look at my little profit, felt smart, and then watch it go up 1,700% without me. But here's the thing that people get backwards. The lesson from Tesla was never buy every Elon company at any price forever. The lesson was don't sell your winners too early. Those are completely different lessons. Passing on a $1.77 trillion stock on day one isn't me being gun shy from Tesla. It's me finally applying the right lesson instead of the wrong one. Here's the part almost nobody's talking about, and it's the biggest reason my real money stayed out. The amount of SpaceX actually trading right now is tiny, only about 4% of the company. That's why it popped. But the real flood is coming. Around December, the lockups expire, and that's when all the people who've held SpaceX privately for 10, 15, 20 years can finally sell. And a lot of them will. And honestly, good for them. They took the risk way back when nobody knew if this would work. They were patient for a decade or two. They earned the right to cash out and go live a life of luxury. Cash is king, and that's their payday. But now think about it from my seat as a buyer today. If I go put real money in right now at the all-time high price, who am I buying those shares from down the road? I might just be the guy handing my money to an early investor who's cashing out. I don't want to be somebody's exit liquidity. I don't want to be the last guy at the bar buying around right as everyone else is grabbing their coats to leave. So what about my 11 shares? I'm going to sell them eventually, and not because I think SpaceX is going to zero, it's because of a portfolio lesson most people never learn. An 11 share position that I have no plans to ever add to is a wasted position. There's a point where having too many little scraps of stock actually works against you. You over diversify. You can't track any of it, and none of it moves the needle. I keep my portfolio tight on purpose. And here's the thing, I already have my SpaceX exposure where it makes sense. I got into the Fundrise Innovation Fund before it ever went public, and SpaceX is a position inside that fund. So I had a little skin in this before today. That's plenty. The 11 shares were for the experience and the report. I'm trimming them down the road, not flipping them day one. By the way, brokerages actually penalize that, but that's not even the point. The point is discipline. So would I ever own SpaceX for real? Maybe. I'm not religious about it, but not like this, not on day one at the highest price it has ever traded with the insiders still locked up. I'd rather wait, Let the lockup pass. Let the early folks cash out. Let the stock actually find a real price instead of a hype price. And then pull up the numbers again. Ask me in 2027. Until then, I've got my 11 fund shares, my little fund rise exposure, and zero FOMO because I understand the math. So tell me in the comments and be honest with yourself. Did you put in for SpaceX on Friday? And are you team I'm in the price because it's Elon, or team let the dust settle first? There's no wrong answer, and it's your money and your call. But I want to know where you landed. Subscribe and follow along. I'll report back after the lockup and we'll see where this thing really trades. And of course, I'll see you in the next one.